G'day, Albany East West. Going to look at uranium as we do each and every week. Let's just jump straight in. I'm just going to start here with CCJ. Now we're out here on a 3-day chart. The first thing I wanted to address is something I've seen a bit. Actually, something I've even done myself in the past. Do continue to do it somewhat on the side, but I don't really present it much anymore. And that's when you talk about the time cycles of what's going on here. Now, I would just say with that, you've got to be really, really careful because the time cycles themselves and the ways that I've seen them presented is basically based off the Hurst time cycles. Now, there's not a lot of literature on Hurst. I've sort of looked into it as much as I can. It's quite difficult to come up with the time models. You've got to do all the spectral analysis on all the cycles that are going on underneath the main cycles. It's quite involved, and I wouldn't have said for me it's terribly accurate. So I'd be very careful about how you apply them. Not bad as a guide, but I'll just bring up an example of how you can sort of look. You can do this with any technical analysis, right? You can bend it to suit your own view. But just if you look at these two examples, so what we're going to do here is just take cyclical lines, and if we go from a low to a low, I think that's the way that's been shown in other quarters. So, looking at that, I'll just take this back to a daily. Okay, so looking at this, and we're talking about here, this is saying 163 trading days, so roughly something about that from this low to this low. The problem is as you go up, you go, oh, well, this one was close, well, kind of, this one was close, kind of, this one, this one, not really, this one, yeah. I mean, it's hit and miss for me, and there's nothing to say, okay, well, what about this cycle? I'm going to take from the low to the major high. Okay, I'm going to take that as one cycle. And what does that give you? So, what does that mean? Does that mean we're about to have a massive capitulation because this did this and that did that? Can't rule it out, but I don't think so. I mean, you can put these fancy sign low, and this is the cycle, and this is the next cycle, and this is the... I don't think it means much, guy. I really just don't think this means a great deal. I mean, why couldn't you lean into that? That's a lot more precise than leaning into low to low. I'll leave it up to you. All I'll say is this: if you are interested in time cycles, and they are very interesting, but I think there's a better way to do it. There's two follows on X I would suggest if you want to get into time cycles. One of them is Erlofsky, really nice guy, and he does a lot of work on time cycles. Looks like he's even got a video out here that you could have a look at. But he does a lot of work with cycles, and you'll probably learn a fair bit from him. The other is Norvast, and Mao's like that. He's considered a bit of the godfather of cycles. So I would look at their work if you're interested in cycles. I'd just be very careful about how you apply it. But I think the techniques that Alex and Malcolm use are a lot more simple than what's going on with her cycles. Okay, I've looked into these. I've presented these before. I don't do it as much anymore, but I think there is some value in it. But that is how I would go about it. Okay. But enough said on that, because what I'm trying to do here is I try to unravel as best I can what's going on the hard right edge in an effort to understand more about what's happening in the big picture. So let's go to that right hard edge. And just looking here at CCJ, for me, it's just about what's going on through this section. So just looking at this, I think this is, this is pretty basic. So I just look at this on the big picture and I go, okay, well, what's happened here? So we've got that. That's just the point of call. That is just the structure that the market's flowing with at the moment. Okay, the rally, the retrace, the measured move, and you can see how it respected the measured move up here, amongst, of course, other factors. But that is just plain and simple. Okay, plain and simple. That is how the market moves. That's the trend. So as a result, as we've had one finished measured move, we just move pivots and we go to the next one. So here we've kind of, it's had a little bit of an attempt to bust through here. Okay, we had this big down bar last week, which wasn't great, but the market's managed to hold its feet. So it took this bar, or this bad day on last Friday, in its stride, and it's continued to sort of hold these lows. So that's kind of forming up as a reasonably good area of support with a few factors going with it. But of course, we've got to consider the short-term permutations of what's going on, and that's the fact that We're in a downtrend. And we've got to break that before we can, think about how the market's going to structure to get higher than here. So what's happening in here? I mean, we started off at the peak, okay? This one broke through, it got too far. So what do? We just move the pivot to the next high. We come off the low. What happened? We got up here. We had a little slight break of the 61.8, but nothing conclusive. And the market's just got down here to the measured move. So we've got, once again, just internally here, we've got another measured move. Okay, that's completed. So, once again, you just do the same process. Where do we go? We go off the next pivot. Now, we did bust through here, but this was a big down day. So this is kind of messed up in terms of measured moves now, I would think. I'm probably more just interested in just looking and waiting for this range to resolve. So, talk about range expansion. If this managed to break back up, this would represent 100%. Actually, I'm just going to widen that ever so slightly just to be a bit more accurate. That would represent 100% of the range, okay, of this range expansion. And that would line up with 61.8%, the retracement, the length of this entire move. Okay, so that would be my point of call, moving forward. I want to see how the market responds here at $53.40, round about there. That's where we sit, okay? But as it sits, we're still in this downtrend. We're yet to break it. So we had a start, okay? So we did have a start here, but we never really made it to new sort of pivot swing highs. So we've simply swung, and we've swung. So we just need to get through this, and we need to then hold. We need to have that sort of movement. That's what we're looking for. Until then, we just wait for that little inside range that we're talking about here to resolve. Energy Fuels. This had such a promising start, but it's just gone back into its shell somewhat, which is disappointing. And that's why you don't get too cock-a-hoop, because what you still really need to see is that, and we don't have it yet. Okay, what we've got is a correction of the rally, but we're still yet to break the major swing structure. We still got until we got to this point. Okay, so we did get the higher high, so we are trying to put in this lower low. This is what we want to see. That's all we need to see. Once we get to that, then we're starting to feel more confident that this long-running downtrend, corrective downtrend, is over. Now, you could stay optimistic and say, okay, well, we have got the higher high and the higher low. Is this the trend channel that's emerging? I wouldn't go there yet. I think that's reaching. That's not a confirmed trend for me yet. If it's got to hold this low, and it's got to break this high. Okay, it's got to do that before I'd start to go, okay, well, we've got some sort of trending market going on as we sit, but we don't have that. So what's counted a little bit against this is how far we retrace down here. Now, we sort of, once we got down here, you can see how we've sort of just tried to battle in this area, but we weren't able to push away, and the sellers broke through. We've held a 78.6, but this has now gone quite deep. So I think the problem here is, last week I was looking at a fair bit of Elliott, and I only apply Elliott when it looks quite obvious to me, but this isn't so much because of this low. I think I suppose you can go 1, 2, 3, 4, 5, and maybe you can call that the 5-wave move, but it doesn't look very good to me, which is why I wouldn't go there. If this low had been lower and this was 1, 2, 3, 4, 5, then I would have been more interested, but it's not, so I would leave it. And then this move back down also hasn't been perfect, right? I mean, ideally you want to see a zigzag, something that's quite equidistant, but here we've got something that's a bit more Frankenstein-like. Okay, so that's kind of not exactly what we'd be looking for. So once again, if we're not getting what we're looking for, we just put it aside. Don't use it. So just go back to basics and what's happening back the other way. So right now, we've just had a shy away from the 50 of the move down. Okay, so we're yet to resolve what's going to go on here. But I think if we can, you can see here, I'm just taking this volume pro, actually, I'll just take it back to here, right? You can see here that there's not a lot of market acceptance above in the retracement zone. So that bodes pretty well. This can still be a trend, of course. It's just not going to have the measured move connotations to it. But that is where you might go more sort of thinking about more about at least a one-to-one move. Okay, so now that would be more what I would be expecting if I was thinking about an AB equals CD pattern. I'd be thinking more about that, and that would be good because that would fit our bill in terms of breaking through this high, and it would break through sort of this very subjective and fatly drawn trend channel, okay, which just represents the trend line itself. So, this little area here is kind of interesting because, like I said, there's no real market acceptance through there, but we do have the retracement of this move sitting there. So, I would like to see this just bust through without any sort of sellers down. There's a little bit of a volume node through here, but if we can just bust through and look for that one-to-one, that sort of AB equals CD move, then the trend's in place. Now, I just wanted to finish off this week talking a little bit about NextGen. So, I'm just talking to a friend of mine who's in the stock broking business, and their company is looking very closely at NextGen, and they're looking at it from a perspective of Australia. So, read between the lines. There might be a big bad bully boy Australian company that operates somewhere near NextGen's assets, and who knows, maybe they're having a little look. Don't say too much and don't quote me, but I think it makes it interesting to keep an eye on this one. Okay, so we know there might be a little bit of fundamental floating around the background there. I'm not 100% sure on that, but let's just look at what's happening here. So we know we had this really good trend that's since broken, and now we're undergoing our correction. Now the only bit of danger for me here really is that we haven't got back to the 50%, but nothing says we have to, of course. However, you can see how that sort of retracement zone lines up pretty nicely with the old resistance level here, which is quite a good pivot, and then we've kind of held it, but to test it again would be nice. So and even just coming down here to touch this, that's fine, but whether or not we're going to actually have the gumption to do it is another question. But just for me, I like to sort of look at this big picture and think, okay, well, look, if I can make some sort of case for a bottom coming in here, and maybe it even gets a little bit deeper, but I'm not going to go there just yet. But if I can make a case for this coming in here, then, yeah, okay, that becomes a setup that I'm interested in because I know that these measured move trades happen all the time. So just when you come here and look at this, this is actually on 4A, but this top actually was higher. Okay, so that means that when we come back out here, if we're looking at this in an Elliott sense, any sort of movement would have to be start from this peak. Okay, so once again, I'm not massive on the Elliott here, other than when I look at this range, that looks like when you sort of apply Elliott, that looks like what you would consider wave 4. Okay, that looks like a classic sort of wave 4 structure. But sort of looking at just how this looks very, very impulsive, but I don't think you can make that a 5. That looks like a 3. Yeah, once again, like I said, it's not clear. Put it aside. Just put it all aside. And what do we got? Okay. This is why I'm happy just to go to the measured moves and keep it very basic, because what's happened here? Up, retracement, measured move target. So there it is again. It just happens over and over. That's why it's worth paying attention to. So it just means that this would be a bad place to sell. Okay, if you're going to don't put your stop there, put it somewhere away from there. Okay, but once again, just do the same thing. What do we need to see for this to be defeated? Okay, well, we've got the retracement zone here, so that would be the next point of call. That's where you'd think there'd be the next bout of selling. Now, if we're talking about this being the trading range, which it is at the moment, if we're going to expand that trading range, well, there's 100%, which would put us above the near-term swing. But if we expand this back out, it would put us right into the retracement zone. So maybe the market wants to do this. Okay, that would sort of line up. What does that mean? All it means is this: that would be a bad place to go long, in my opinion. Just in my opinion, I wouldn't, as looking at this in a trading perspective, I just wouldn't go long. I'm not saying, oh, this is the trade and that's what you got to do. I'm just saying I personally would not go long there for those reasons because it's likely to resist there. If you go long there, it's likely to start coming back on you and you'll probably bail out at the wrong moment. Okay? I mean, game it out. You can sort of see how this would work. Let's just say, for example, that this is what did happen, right? Okay? Break range, run up here, right into the retracement zone, hit the 100%, stop, and then retrace back to where? Back to 50%. Old resistance becomes new support. It's not hard to see that sort of thing happening, but that's what I mean. I wouldn't be buying here. I'd be looking for this to happen, and then my plan would be to try to buy it here, and I would probably try to stop out below there. That would be how I'd try to play this in a measured move sense, going back the other way. But of course, and sadly, you've always got to have a plan B in these markets because I think very few analysts that are out there do, and that's because most people in uranium aren't looking for it. You're not looking for this information. You're looking for confirmation bias. You're looking for whatever makes you think that you're right. I don't deal in that. I just deal in what I can see, and I just consider both ways. So if this range broke, the range expansion here would take us straight down into the major retracement zone, which in a lot of ways wouldn't be a bad thing because we would have come down here and then I would have just thought that we've more filled out that pattern. Okay, so it is about thinking about this range and seeing which way it breaks. Okay, so like I said, I mean, maybe you can Elliott up 1, 2, and then this will be the third wave coming down here, but I don't think that's what's going on. In fact, I'm not even going to pursue that because it's not clear enough for me to make a case. So, some people, I would be more thinking that this would be 1, 2, and then inside you've got 1, 2, 3, 4, 5 to make the third, and that would mean we're going a fair bit lower. I don't see that happening, even though it can't be ruled out, but that would be just the next point of call. So it's all about this range, okay? It's just all about however this range plays out. So we just wait for it to break one way or the other, and then you just make your trading decision based on that. Okay, so that's where we sit with NextGen. But like I said, I don't mind the idea. I'm looking for the setup to go long because I don't mind the idea of being long this one. I think it's got a little bit of potential tailwinds that aren't out in the market, and I'm certainly not the herald of something new. I'm just saying there is potential there. No, I'm not saying anything more. So that's it. I'll leave it there for this week. Thanks for watching. Don't forget to hit like and subscribe. We'll see you next time. Bye for now.